Thank you, everyone, and welcome to today's edition of Frontier Opening Bell. I am Bosin Omofaye. Welcome, Luke Ofojebe, who is an equity analyst for the investment bank and securities trading firm, Vertiva Capital Management. Luke, good morning.
Good morning, Bosin. Thank you
so
for having me.
It's great to have you. Ali Kansacho, CEO and founder at Rich Frontiers Management. Good morning, Ali.
Morning, Bosin.
Ayodeji Ebo, CEO and chartered trader at Afrinvest Securities. Ayodeji, it's good to have you on the show as well.
Good morning. Thanks for having me.
We have quite a bit of a ground to cover. So let's touch on the closing numbers for 5 of the African bourses, equity side that we cover on a daily basis. Nigerian market softened 0.3%. A similar fashion in Ivory Coast, BRVM, 0.86%. 1.86%, a bigger decline for the Egyptian market. Kenya went down about 0.5%. South Africa managed less than 0.1% on the day of the release of its collapsed second quarter GDP. Look into the Kenyan market quickly and give us a few sense of what ShopRite is talking about exiting the Kenyan market just after 2 years of coming into the country. It says the remaining 2 stores will be sold off or closed down by the end of this year. Effectively, next year, ShopRite will be out of the largest economy east of the continent. Tanzanian inflation in yesterday unchanged, 3.3% year on year. Malawi's Nico Holdings reported a net profit of about 7.6 million kwacha. And on the island of Seychelles, the August inflation came in 1.2% from 0.9% in the month of July. Let's chat to the Kenyan ShopRite story, Ali, as a headline here.
Yeah. So, Bosin, there has been a history of South African companies coming into Kenya, and they've not been entirely successful. And ShopRite is another of these entities. It came in a couple of years ago, took the flagship store in Westgate. Do you remember the terrorist attack in Westgate? Nakumatt used to be there. Yeah. It took that. But unfortunately, it has not been a successful business. Carrefour, which came from the Middle East out of France, has been incredibly successful at dominating the space. And here, in this particular case, ShopRite is really cutting its losses and returning back to and exiting the market. This was expected by a number of people, but it speaks to what has become a very competitive space and one in which the winner is taking all. And the current winner in that space is Carrefour, and ShopRite could not succeed against such a stiff competitor. To go to your other stories, inflation in the Seychelles and Tanzania, quite benign. Tanzania's strong agricultural economy, so keeping a lid on food prices. The Seychelles issue is really around tourism. They're incredibly tourism dependent. They receive 3 times more tourists than their entire population. And that's really all about the restart of the tourism industry over there, which I think is what they'll be looking for. Nico Holdings is a conglomerate, that's a very good performance in what has been a tough economy in Malawi, which is expected to post negative GDP growth of 1.8% this year.
We'll have a bit more within the South African story was a bigger story for just a second. But we're looking at the Nigerian story, our Nigerian market space and the economy, the 2.3 trillion naira stimulus being announced by the government under the ESP is a big story. But again, the vice president says nothing is going to happen by magic. The government has to spend money. Yesterday, we got a directive from the president ordering ministries and others to release funding for this COVID-19 economic recovery program. It all remains anyone's guess when these monies will arrive and then hit the ground running. Meantime, the Nigeria Economic Summit Group has gone into crossfire with the Central Bank of Nigeria, sending a 15-paragraph matters of urgent attention to the federal government. The central bank took a bit of that and responded with a 3-page, a strongly worded document overnight. So the jury is out there about this face-off that's now cutting everyone's attention. Okomo Oil, which is in the palm oil business in Nigeria, forecasting 3.7 billion turnover for the fourth quarter of the year. Fidelity Bank is a tier 2 Nigerian lender, is issuing 50 billion naira in bond in Q4, joining the expanding corporate bonds and the commercial papers markets in Nigeria's space. Ghana has gotten a bit creative, which is royalties from gold, saying 20% of that will be invested via an IPO process in those gold mining companies. And inflation within the West Africa's UMOR is about 0.7% higher to 2.5 in year-on-year in July. Ayodeji, a quick one about the Nigeria space. Do you have a minute to talk about this NESG, whatever, the central bank response and the stimulus package on the macro side of it?
Okay, thanks. It's interesting that we're seeing at least the private sector also trying to put out the words on their position, and we've always known the NESG to have always have worked with the government on how they can reposition, and based on their annual conference, they pick topical issues and they try to see how they want to deal with those topics and come up with a communique. And so based on this statement that we saw yesterday, I know few of them touched on CBN, and that was why the CBN also responded. The first one was on the agri funding, intervention funds, and based on, even from my own view, when we look at the amount that has even been spent, we've not been able to see some form of transparency or assessment. Let me put it that way, impact assessment, which is necessary. If you check the capital, the trade reports rather, you would still see that beyond petroleum products, agri still constitute a major proportion of what we import, which is very worrisome. So beyond just setting up the intervention funds, I totally agree with them that there needs to be an overhauling of the value chains within that space. There's a lot of value that can be created within the agri space in terms of job, adding value to current raw materials. If we identify what are the major raw materials that we import, beyond also generating jobs, it would also reduce the demand for FX, which is even in favor of the CBN. But CBN has responded that they do their own due diligence, they follow the process, and there's a lot to be done within that space. So, but that really doesn't solve the problem. So it's beyond just the monetary. CBN is trying its best. Beyond the monetary policy, there's a limit to which they can do. The fiscal authorities also need to sit down. So we've seen a lot of crowdfunding programs going on within the agri space. Also moving to the new acts that they spoke about, getting immunity for the CBN, which the CBN also responded that it's always been in the BOFIA Act. That's the the act that guides the banking space. And they try to also provide explanation within that space. But by and large, beyond even from the CBN angle, they've also been able to itemize from the CAMA, looking at how they can also create job insecurity. I think it's really a very commendable one from the NESG, also to state their position, and so that we don't just, not about just the annual conference, we can always also know their position. This is their view, and government can sit down. For any meaningful government, you don't just push it aside. You sit down to reassess and score yourself. If it's and you see that maybe some areas they really don't have much understanding, you can call them, because these are the people that guide and also have direct impact and direct relationship with the private sector. So by and large, not to overflow it, I believe that what they have raised are very germane, and there are things that government, both the fiscal authorities and monetary authorities, should also look into. The FX, which was also raised, we can all still recall that was part of what took us to recession in 2016. And if it was just from last week, we started seeing the intervention, and we know what the implication it will have on FDI. We've lost the FDI based on our policies, and now the FDI, this new policy on FX too, may have a negative impact on them.
Thank you. I think the vice president, the presentation he made at the retreat for ministers, cabinet ministers, the first for cabinet ministers and permanent secretaries and head of government agencies, was very opposite. It was titled "The Urgency of Now." In other words, the government and the presidency realized what you call the urgency of now. And it was quite interesting, Joshua, that the speech of the vice president came on the same day that the NESG released the 15-paragraph statement, and the central bank replied later in the evening. So it looks like the three of them were actually on the same page, as it were. There's a need for urgency to get the economy, Nigerian economy, back on track, looking at the various fault lines that we have: infrastructure, agriculture, even COVID-19, lack of enough of FX reserves, as it were. Joshua, sorry, I beg your pardon, Luke.
Okay, I think that was a good move by the NESG. What I just need to say is that the CBN can only do much in this case. I think both the monetary and fiscal authorities need to come together and see how they can address the situation. Because, like I mentioned earlier, the CBN can only do much in terms of offering cheaper credit facilities to players in the agri space. So we still have some major challenges that are impacting output from the agricultural sector, and one of these is still the security challenges. So we are still having communal clashes in the Middle Belt, and that's the major food producing region in Nigeria. And recently, we've also started seeing cases of violence in South Kaduna, and that's also impacting food output in that particular part of Kaduna. So I think it's something the government also needs to address if we really want to solve the situation of food security in the country. So that's also one of the things impacting output from the agricultural space. Another thing is the industrialization of the agri sector. That's something that the government also needs to look into. I understand that at the moment we are mainly focused on producing raw crop produce and just exporting them. We are not really into refining these raw crop materials. So that's something the government can also look into. I mean, the government cannot do it alone. In this case, you might need to come up with policies that might seem attractive to foreign direct investors who might want to invest for the long term, provided you are keeping exchange rates relatively stable. So that's something that the fiscal policy also needs to address if we really want to ensure there is, if we really want to ensure that there is sustainable long-term growth in the agri space, and that can actually lead to improvement in outputs and consequently lead to improvement in employment rates. Thank you.
Thank you, Luke, for your views on trying to balance all of this. Again, it's a very interesting scenario. We're right in the middle of a very tough situation here. But of course, the situation is also tough in South Africa when the GDP came out yesterday, 51.0%, beats all the estimates. Even Bloomberg's estimate of 47.2 was beaten by the 51.0% decline in the economy. That's splitting the economy into half, contraction of 4 straight quarters, taking it all the way back. ShopRite's meantime releases full year numbers yesterday. Sales up 6.4%, 156.9 billion rand, dividend of about 227 cents. That's a sweetener for investors. And MultiChoice in South Africa will have a new CEO. Oh, sorry, the CEO is stepping down. Mark Rayner, who is going to succeed him, we're going to get that announcement. Ali, South Africa's GDP as big as it can get. This goes beyond COVID-19. Will the level 2 lockdown easing help this economy get back on its footing?
So, like you're saying, the problem was that South Africa was going into this COVID crisis extremely weak. It was already had experienced a recession. So, you know, the COVID emergency was like a knockout blow. It exceeded worst expectations in the market. But I think if you look at how the currency has reacted, which is not that bad, it's telling you that the market is looking through this number and looking post the number. Now, the question is, what's going to happen next, which is what you were posing. Is level 2 going to ignite some kind of recovery? Are we going to return to economic growth? I think it's a very, very tough call. I think it's going to take a little bit longer. I think this year is really a wipeout. We should see a bit of a recovery in the second half, but nothing significant enough to make a dent in what we've seen here. Overall, I think when you look at it in the context of emerging markets, it's not the worst. There are some ones which have been worse, but really I think now policymakers, government have got to come up with a plan, because if they don't, we're just going to slide further. It's a very tricky moment for South Africa. What we can say is the statistics are giving us the real picture, and what really needs to be done now is to relax further from level 2. The numbers are justifying that, to open up the economy, to start to get the whole thing back on track. I am worried about the situation down there. It's been in the slow lane since 2014, Boasson. We've had negative per capita GDP growth since 2014. That's 6 years, and we really need to get off that trajectory. With respect to your other stories, MultiChoice, of course, MultiChoice is an interesting business. This is DStv, and they had, they got a lot of competition from the streamers like Netflix, which are conquering the continent amongst others. But they seem to have now aligned themselves better with those streaming services and are offering things like Netflix across their platform. It'll be an interesting business to keep an eye on. I'm not sure what the reasons are behind the stepping down, but it's probably just looking for a change of guard. But obviously, South Africa's data point was the key report from yesterday, and the market continues to digest that, and we need some kind of recovery as soon as possible.
Thank you, Ali. Ayodeji, is there a sense of where we are as far as the market is concerned today? Look at the fixed income side very quickly with the DMO's 128 billion offering.
Okay, I think the market is still awash with liquidity, so there will still be continued pressure on rates. So while we're not expecting any significant further decline in rates, but it will still remain almost at this current level. If we look at the response even of the CBN regarding interest rates, they are also in favor of this low interest rates environment, such that they feel that based on what is happening, there's more focus of funds to the real sector. Yeah, while this is not positive for long-term, for savings, especially for fund managers and pensioners, but you can also attest that there's been a shift of focus even to the average investor trying to take on more risk. So the real sector is attracting more funds than it used to attract. So we feel with what they are, just 128 billion is still very minute relative to the available liquidity in the system. And with still, when you look at even for the rest of this year, when you look at the maturities, commercial paper maturities about 348 billion, corporate bond maturity about 50 billion, coupons about 500 billion. We are expecting another OMO and NT bills maturity of about close to 5 trillion. And when you look at what the government has raised so far, they've raised about close to 2 trillion. And when you look at their target is about maybe 2.5 or 2.6 trillion. So they're still, what they need to raise is less than 1 trillion, and you're expecting a maturity of about 4.8 trillion. We feel some of those funds will find their way to the equities market and also to the real sector.
Interesting, the fixed income side. Josh, Luke, in terms of where you're looking at the equities market today, after we saw the profit taking for 2 straight sessions in the banking sector, do you think will continue, or do you think investors are done with those earnings?
So really, investors are still showing the banking numbers that were released last week. So today and for the remainder of the week, we might just see more of mixed trading and more of negative trading in the banking sector and positive trading in the consumer goods space. So for the banking sector, we might still see a bit of sell pressure on the likes of GT and Zenith Bank. Whereas for Access Bank, given the fact that the dividend yield on Access Bank is relatively much higher than what you can get from these other top tier 1 banks. So we might see like a renewed sentiment on the stock today or tomorrow, but all in all, we think Access Bank might just close up week on week this week. However, for the other tier 1 stocks, we might not really see that strong buy-side sentiment on them. For Zenith Bank, given that the bank's performance was much better than expected, we think we might see investors cherry picking on the stock if the price goes further lower than what it's trading at currently. And even at current price, it's still very attractive to investors. So it shouldn't be surprising to us as well if we see investors taking positions on the stock today. Whereas for GT Bank, I think we might just see more of sell pressure today. And then maybe after 2 or 3 trading sessions, investors might come to cherry pick again. For the long-term play, that's the sentiment towards long-term plays pretty much weak because a number of investors don't have that strong confidence on the Nigerian economy in terms of recording positive growth. So we think that long-term play is really out of the market. So what we are seeing right now is more of domestic investors taking positions ahead of short-term gains. So that's still the primary driver in the equity market. For the consumer goods space, quite a number of stocks are trading at very low prices. So we think investors who are interested in some of these stocks might just want to take positions in them. But like I mentioned, it's not really for long-term play. It's more of short-term because for a number of these companies, their operations are still being affected by the impact of the pandemic. So that's pretty much it.
I want Luke and Ayodeji to give me about 30 seconds each in a short while about the GT Bank's announcement, conference call yesterday about going holdco in Q1 of 2021. They want to do a one-for-one for existing investors. What does it mean? What's your outlook on GT Bank moving forward, structuring its operations, not just in Nigeria, but across the Pan-African footprint? Quick one. So let's talk about the North Africa very quickly for just the final lap of our market rounds for the day. Algeria is launching an Islamic insurance within the what is called Takaful within the country, but is now opening banks in Sub-Saharan Africa, stepping out of the Maghreb and North African region into the Sub-Saharan Africa. That's the one big news. Meantime, the trade between Egypt and Bahrain, trade volume increases to nearly $500 million. And Morocco, the banks said their loan portfolio increases 5.8% in the first half of the year, while Tunisia's inflation rate falls to 5.4% in August. Ali, I'm interested in this Algeria story about not the insurance, Islamic insurance fund, but opening banks in Sub-Saharan Africa.
So yes, they have been a bit of a laggard. I mean, when you compare them to Morocco, Morocco's expanded quite considerably. Egypt has been on the sub-Saharan African expansion trail. Algeria has been lagging its Maghreb neighbors, and I think this is a positive and interesting development. I mean, you've got a big economy here, well-capitalized banks at home who really belong regionally, and I expect them to make a meaningful move. And I think it's interesting, that insurance story as well. The Islamic insurance can be a spear for these folks to enter new markets with that product suite and then expand the product suite. We've seen that happening as well across the continent. So I think it's a positive sign, and frankly, the more the merrier, because it brings competition and it brings a diversity of product to the market. So I'm positive about that story. This is a big economy, Algeria. They should be expanding across Africa, and I think this is the signal that that's precisely what they're going to be doing going forward.
I agree with you. Looking south, I'm sure they can see the demography in West Africa, Nigeria, Cote d'Ivoire, Ghana. They can see markets in East Africa as well, in Kenya, down to Tanzania and the rest. Again, if you're talking about the new AFCFTA, I think they better get their banks out there to be part of the game. And I'm sure they can also see how equity holdings in Kenya is expanding down to Congo DRC. They can see Nigeria's Access Bank making moves into Kenya banking sector, and Rwanda consolidation going on between West and East Africa and Central Africa, and they're just sitting pretty up there and not being part of the game. I guess this is part of the consolidation within the banking industry and expansion across the African continent. I think this is good news. Ayodeji, GT Bank is going to consolidate its Pan-African foothold, become a holding company like Stanbic, like FCMB, and FBN Holdings in 2021. This is a born-again GT Bank.
Interesting. And I think GT Bank have seen how Stanbic is growing, how they've been able to balance their revenue, both in the interest income, which is the core one, and the non-interest income. So they've seen the role the PFA and asset management firms are playing to support their income. So I think what they are just rolling back to what they used to be, and they would try to identify very key businesses that can support and enable that the income is retained within the group. And we feel that that is also positive for GTB. So they will focus, we won't be surprised, they would also want to reacquire, look at an insurance, within the insurance space, because they already have the clientele base. So they look at the insurance space, look at the PFA space, look at the asset management space, look at security. So they are just going to ride more on their customer base. And with that, so you will now have a mobile app, a digital mobile app that can solve your investment problem, that you can be able to buy your insurance, whether it's your health insurance, your car insurance. You can be able to monitor your PFAs. You can be able to invest in stocks, invest in fixed income instruments. And I think with that, it would really help. We can see Stanbic just upgraded their mobile app, though they are still, you have it, there's 6 major businesses on one mobile app, but it's still not just one login detail.
Single platform,
yes, log in with different login details. So we believe that this is positive, and investors would also be excited with this.
Yes. Look, you think this is a pushback now from the big banks when they see telco giants like Airtel, like MTN, and the licensing of new PSBs, new banks by the central bank providers to get a corner the bigger size of the market and remain very, very profitable.
Yeah, so in my view, I think this would be an interesting development. I think it's more of corporate strategy in a bit to further have more exposure into other business lines. We understand that in 2005, the CBN put an end to universal banking. So that restricted banks' options in terms of playing in other business segments. But coming up with a holdco, it gives you the opportunity to be able to have that exposure in other business lines. So I think for GT Bank, it's more of corporate strategy, like Ayodeji said. So maybe the firm is currently looking at stepping into other major business lines, maybe pension, for instance. That's is still up to anyone's guess at the moment, but it seems more like what it is for access for GT Bank rather. And for a bank like GT Bank, I mean, looking at what the bank has done so far in Nigeria, the bank is more like the bank that you can tell that it easily sells lifestyle. So what GT Bank sells is even more, is beyond the regular banking services. It's more of selling lifestyle. And they strongly believe that with this holdco, they will be able to do that efficiently. So we might see them going into other business lines, and given the fact that they have that strong customer loyalty and strong customer base, that can actually help to boost their income line from these different businesses that they might want to go into.
Great. We appreciate your thoughts, everyone. If this holdco will allow everybody to get back into universal banking in a manner of speaking, without breaking the without breaking the law, I think with fintech and digital revolution, I think the banks have found a very smart way of taking back everything they sold off years ago. I think it's a backdoor approach. I could smell that already. Thank you so much, Ayodeji Ebo of Afrinvestor. Thank you for your time. Luke Ofojebe from Vertiva Capital, equity analyst, and Ali Kansacho, the rich frontiers man in Nairobi. Thank you so much. Have a great day, everyone. We appreciate your time. See you again tomorrow, Thursday, the 10th of September. Bye for now.